Sikshayati, platform for eminent authors, engaging teachers, successful students. To know more, email. Capital and revenue expenditure. To calculate net profit, only revenue, income and expenditure are to be considered. To ascertain the financial position of the business, capital expenditure and income or receipts are to be considered. For example, cash introduced in business by proprietor is a capital receipt, but cash received on sale of goods is revenue receipt. Revenue means the aggregate exchange value received for goods or providing services, whereas receipt means inflow of money into business. Capital expenditure. If the benefit of the expenditure is not exhausted in one accounting period but it is spread over future accounting periods, the expenditure is known as capital expenditure. Capital expenditure increases earning capacity of business and not incurred to meet day-to-day expenditure. The benefit of its usage is spread over a number of future accounting periods. Examples of capital expenditure: acquisition of asset, expenditure incurred to acquire fixed assets intended to be used in the business beyond the current financial year and not meant for resale. For instance, a plant bought during the current accounting period intended to be used over and over several years. Additions or improvement of asset, an additional item of plant or machinery bought to improve the capacity, efficiency, lifespan or economy of operation. For example, more spindles added in a ring frame in a spinning mill. Cost of such spindles added is a capital expenditure. Expenditure of right or benefit of asset, expenditure incurred for acquiring benefit or right of an enduring nature, for example goodwill, copyright, trademark, patent, etc. Expenditure incurred to carry on asset, expenditure incurred in the course of acquiring a fixed asset and directly connected with it, for example machinery construction and installation expenses, stamp duty and registration charges in the acquisition of land, etc. Extension of asset, expenditure incurred to extend capacity of business, for example a new room is constructed to increase the capacity of a business. Revenue expenditure. Revenue expenditure affects profit of business for the current period and it is deducted from revenue income to determine net income of a business. Example of revenue expenditure: day-to-day expenses. Day-to-day expenses in the conduct and administration of business and gives benefit less than a year, for example rent, taxes, insurance, wages, salaries, carriage, etc. Expenditure of current assets. Expenditure of current asset for conversion into finished products, for example raw materials and stores. Expenditure incurred to maintain fixed asset in working order, for example repairs and renewal, depreciation, cost of spares, etc. We hope you have liked the video. Write your comments and click on like dislike option. Your comments would help us to improve. To get more details about authoring, teaching and learning at Sikshayati coaching classes and online tutorials, and to get free ebook, click on the red subscribe button at the bottom of the video and send email to us.